Palantir's stock has exploded over 425% in the past year, and now it's staring down a $293 billion valuation. The question is, can it justify the hype, or is a massive correction coming? Let's break down the thesis, bull and bear cases, and what the future could hold for this high-flying AI stock. Palantir Technologies has quickly become one of the most prominent names in AI-powered data analytics. Its artificial intelligence platform, or AIP, is helping businesses and governments unlock insights from complex data like never before. The company's growth has been staggering, surging to $124.28 per share with a market cap nearing $300 billion. But here's the catch. It trades at a sky-high forward PE ratio of 167. That's not just expensive, that's perfection priced in. For long-term AI believers, Palantir may still be worth holding, but for those looking to lock in gains or avoid high volatility, it might be time to trim. And with Q1 2025 earnings just around the corner, this could be a make or break moment. Palantir's AIP isn't just a buzzword. It's actively reshaping how companies run operations. Its ontology-based approach integrates data seamlessly, and clients like BP and Lowe's are scaling their usage rapidly. Revenue hit $2.87 billion in 2024, up 28.8% year over year. The company has over $5.2 billion in cash, zero debt, and generated $1.2 billion in operating cash flow. It's been profitable since Q1 2023 and posted a 15.59% operating margin in Q3 2024. All signs point toward S&P 500 inclusion, a catalyst that could further boost share price. Palantir isn't just growing revenue, it's growing its customer base. U.S. commercial customers jumped nearly 73% in 2024. With a net dollar retention rate of 131% from prior years, its clients are sticking around and spending more. New contracts, like NATO deals and its FedStart initiative on Google Cloud, show expanding reach. The Gotham platform remains entrenched in U.S. defense, intelligence, and immigration. If defense spending increases, especially under proposed initiatives like the $1 trillion Golden Dome plan, Palantir stands to benefit big. International government deals, like with the UK's NHS, add further diversification. The stock is riding strong momentum, up nearly 68% since April alone, with bullish patterns across moving averages and volume spikes suggesting continued interest. Most of Palantir's revenue is still US-based. As AIP adoption spreads internationally, new markets like Europe and Asia offer big upside potential. For 2025, Palantir is guiding for $3.75 billion in revenue, a 31% jump. Some analysts are calling it the long-term winner in enterprise AI, with speculative targets as high as $2.5 trillion in market cap by 2035. That's more than 13x from here. At 15.6 times revenue and over 54 times free cash flow, Palantir's fundamentals don't support its current price. Discounted cash flow models place its intrinsic value around $15. That's an 88% overvaluation. Even the average analyst target of $78.79 implies 36% downside from today's price. The AI landscape is heating up. Microsoft, Snowflake, and Databricks are catching up fast. As AI tools become commoditized, Palantir's edge in the commercial space could erode. 56% of Palantir's revenue still comes from governments. That's a double-edged sword. Government contracts can be lucrative, but they're also vulnerable to budget cuts and political shifts. And some agencies, like ICE, are already developing in-house solutions. Not to mention, past controversies related to surveillance could spook both clients and regulators. Palantir's Q1 2025 earnings are expected to come in at 13 cents EPS, up 61% year over year. That's impressive, but after a 45% YTD rally, even a small miss could spark a major sell-off. Insider moves, including potential stock sales from CEO Alex Karp and board member Peter Thiel, add more uncertainty. This stock has already shown how wild it can get. It dropped 36% from its February peak. With only two analysts rating it a buy, and firms like Jefferies warning that the price is detached from reality, the risk of a sharp correction is real. Palantir's aggressive stock-based compensation has diluted shareholders for years. While that's slowed recently, it could ramp back up, especially if the company starts acquiring smaller AI startups. If growth slows or execution falters, a pullback is likely. Some bear scenarios have Palantir falling below $72 or even as low as $40. That's a harsh reset, but not impossible if sentiment shifts or TAM projections prove too optimistic. Palantir's future hinges on scaling AIP and maintaining its lead amid fierce competition. Its guidance for 30.8% revenue growth in 2025 is ambitious, and partnerships with firms like Calypso AI and Google Cloud are encouraging. But that valuation leaves no room for error. One earnings miss could knock 10–15% off the stock. Rising interest rates, regulation over data privacy, or delays in government contracts could all add pressure. Market sentiment remains divided. Optimists are betting on a breakout quarter. Pessimists see a ticking time bomb. Analyst targets range from $40 to $125, showing just how wide the uncertainty really is. If you believe in Palantir's long-term dominance in enterprise AI, the company's balance sheet, growth, and sticky customer base make a solid case for holding. Just be prepared for turbulence. For short-term or risk-averse investors, now may be a good time to trim or take profits, especially with a 45% gain year-to-date and a critical earnings report on deck. A pullback to the $110 range could offer a more attractive re-entry. Ultimately, portfolio diversification is key. Palantir's volatility is not for everyone. Watch key technical levels, support around $110 and resistance near $124. And if the company can consistently post strong Rule of 40 scores, combining revenue growth and profit margins, it could continue to defy the skeptics. Like always, this is not financial advice. Consult a financial advisor and do your own research before making any investment decisions. Stock markets are volatile, and past performance is never a guarantee of future results.